Well, we've been watching some of these outside markets along with the ag commodities here, and the Dow Jones Industrial Average being up about 520 points right now. Sometimes that means the dollar can do funny things too. Right now in the dollar futures on the dollar index, we have March up 330 points. It continues to kind of edge higher as we go. It now stands at 96.030. And if we look at the crude oil trade, we had a big move in the crude oil this morning. We had the February contract now at 53.59 per barrel. It's really creeping upward here. We are up $1.52 as it stands right now. Heating oil trade has also firmed up today. Of course, that could impact our diesel fuel prices. That's basically how they're traded. We have February 2.6 cents higher at $1.91 per gallon. That would be your diesel fuel futures or your heating oil futures. All right, let's go to the trading floor in Chicago and talk about the higher trade that we have seen in many of the ag grain contracts today. We have Scott Gecas standing by. He's with Prosper Trading Academy. And a little bit of excitement finally late this week here, Scott. Lots of trade rumors flying around. What's the latest?
Yeah, that's exactly what I was talking about all week. Everything all the traders are watching is pretty much due to headline risk. All this going back and forth with China. Finally, we got some type of confirmation of, the tariffs being a little bit lower, and that's why you're seeing a spike in pretty much every market that you're looking at. All the grains, stocks, even oil, even the dollar, everything is pretty much trending higher. The one thing I want to point out if you want to look at the stock market is because of this expected move, this elevated move to the spike to the upside, it actually brought the Dow out of correction territory. So that's a very positive aspect moving forward. We're going to see how this is going to play out over the next few trading days. But as far as the grains go, the volatility is starting to come in where you had elevated volatility pretty much all week. Now, one of the reasons why that volatility is coming in is because the U.S. markets are closed on Monday. So as far as the options go, you still have to take out that extra day of time decay, not just Saturday and Sunday, but also Monday as well.
Okay, now when you look at the grain trade right now, it seems like in the corn and the Chicago wheat markets, not a lot going on. It seems like maybe they're non-believers when it comes to China trade news. They ran them up yesterday. On the corn market right now, on the March futures in Chicago, we're trading just one tick higher at 3.80 1/4. It's actually been lower at times during the day. On the soybean trade, though, it has been hanging on to some decent gains. We have March up 7 3/4. We're at 9.15 1/2. Still about a dime off our earlier overnight lows. And on the wheat in Chicago wheat that I was talking about, it's flat. Nothing going on. March unchanged at 5.17 3/4. And if you look at the Kansas City market, we have the March contract 1 3/4 higher at 5.05 3/4. However, we have July new crop KC wheat down 1/4 cent, and we are trading at 5.24 1/4 in that month. All right, we'll come back in just a moment here, Scott, and we'll discuss what's going on in our livestock trade as we head toward the weekend. Not that far away at this point, and we'll talk about it when we come back. Well, a little bit ago, we were talking about the fact that the Dow Jones Industrial Average was over 500 points higher. We had a surge upward in the value of the dollar and in the crude oil trade. What about the precious metals today? What are they doing? Well, let's take a look at the gold and the silver markets here. Currently on the gold market, you have the February contract actually down $9.90 at $12.8240 per ounce. If we look at that silver market, here's the latest trade. We have February currently down about a dime at $15.38 per ounce right there. Now on to the livestock trade we go. We have the live cattle market on the February down 85 at 126.25. Only one tick from our low of the day at this point. And all the deferred contracts are higher, but boy, not by much anymore. April only 2 cents higher at 126.92. And June up 38. On the feeder cattle side of things, as we switch over there, we have March down a nickel at 142.88. But we have April on out just a little over a dime higher, at least on the next couple of months. On the lean hog trade, that's the one that got the gold star early this morning with the big moves. We have February still $1 higher at 61.85 per hundred. April up 2.42 at 67.05, still above $67. We go back to Scott Gecas, Prosper Trading Academy in Chicago, and he joins us right now. So all the limelight this morning seemed to go onto the hog trade. Have you heard on the floor what that's about?
Yeah, pretty much what the big move in a hog trade is just the expected import campaign from China. If they do release some of these tariffs and they bring the tariffs down a little bit, it's expected that China is going to have that import campaign a little bit stronger and quicker than expected, and that's why you're seeing that bigger pop in the hog market as well as in the deferred months. So it's still just a wait and see, waiting for those exports and the imports to show up. As soon as they do, you're going to see a much stronger move, especially in the deferred contracts. When this does happen, we expect a very strong import campaign going all the way through to this summer this year.
Wow, okay. Do you think that would have any spillover on the beef side here?
Right. Well, the other thing is with the cattle market, I mean, with the cold weather, the supply concerns that are still, much better demand than expected, and that's why you're seeing hitting contract highs. We're seeing a little bit of a pullback right now, but we're not seeing that big of a volume with that pullback. So that's more of just profit taking, just positioning around. The open interest in the cattle market still remains high. The average traders are still net long, funds are still net long, holding a very hefty long position. Until that breaks that 126, 125 area, I don't see any terms of any type of liquidation coming anytime soon.
Okay, we have some midday updates from USDA on the beef cutouts and the pork cutouts. Here's a closer look on the beef side of things. We have the choice cuts going up by 37 cents this morning. But boy, you have the select cuts up $1.95. That spread getting very, very narrow at $3.28 now between those two. And if you look at the pork cutouts in the belly market today, we had the carcass value down 51 cents this morning at 69.59. Ham market was down $1.31. The loin market up $1.19. That belly market that everybody has been watching was up 32 cents at 132.33 per hundredweight this morning. Scott, good to visit with you. Thank you, sir. Appreciate it.
Thanks for having me.
Have
Have a great weekend, guys.
Yeah, you too. Scott Gecas, Prosper Trading Academy in Chicago. Lots going on.
Yeah. Next